Gracias, José de la Morena. Nosotros nos vamos ya directamente con nuestra siguiente invitada. En este caso, conectamos con Alliancebernstein y tenemos con nosotros a Teresa Keane, Product Director at Alliancebernstein. How are you, Teresa? Thanks for coming.
Hi. Thank you very much.
Well, first of all, it's been a real roller coaster this year so far. We have a pretty interesting chart with the MSI World Price Index, and we're seeing that in January the signs of disinflation were there. Then in February we had a strong payrolls number, strong labor market, and finally in March with the fear of the banking crisis. Right now we are seeing again some optimism in the stock market. How do you think so far the clients are feeling? What they are asking right now?
Well, my goodness, yes, it's been very much a real roller coaster of returns and environment that we're facing with regards to equities. And you know, within equities, our team and our investment teams have much experience in managing to these type of environments, quite frankly. So as you say, markets rose very early on, went into the year very optimistic after a very challenging last year. And there was some solid data coming out implying that the Fed was about to pivot, but unfortunately it was very short-lived. And as you said, at the beginning of February, the market declined. And then, of course, we had the banking crisis with the collapse of Silicon Valley Bank. And of course, we had the takeover of Credit Suisse by UBS. Inflation has come down when we look at all the metrics with regards to inflation. It has come down, but it continues to be persistent. And I guess some of the real questions that investors are asking today is, you know, what else is going to happen with regards to, you know, the rate environment? You know, are we going to have a hard, a soft, or no landing? And really, what's the new normal with regards to inflation? Those are some of the key questions that we're facing from investors today.
Questions. Also, Teresa, we have a interesting slide where we see the fundamentals drivers of high quality, resilient business models that you find. Can we talk about these characteristics of companies, and can you explain how these characteristics can help to position the portfolios in the current environment?
Yes, absolutely. We've been managing to this approach actually for the past 10 years. You know, as I said before, when I came on here, we actually developed this strategy really right after the financial crisis, when we felt that beating the benchmark was not enough. Investors are really concerned with regards to that absolute loss, absolute gain, and really managing to that. So how can we do that? How can we enable investors to stay invested in the market and in equities during challenging periods such as this? So we like the company characteristics like quality, stability, and price. So we're looking for companies in today's environment with that pricing power. We're also looking for profitability, returns on invested capital. We're also looking for intangible assets. We're looking at companies in terms of brand, their culture, management behavior. All of these characteristics are really important with regards to delivering on these returns over the long term, but also with regards to facing these profitability headwinds in times of rising inflation and rising rates. So in other words, we are actually countering this type of environment with quality. We're countering inflation and rising rates with quality. And the stability component enables us to offset the earnings risk with those stable cash flows. And then, of course, we're mitigating attractive price. Price will always be important. So we're mitigating crowding with that price discipline. So those are very much the essential characteristics that we have been delivering on for the past decade.
Price and high quality, very, very interesting, Teresa. Also, during this challenging environment, how can investors gain the confidence to maintain also the positions in equities? Because we are seeing a lot of attention right now, for example, in fixed income or other assets. How can investors retain that confidence that equities can perform also fine?
I mean, we do need equities generally for that long-term capital growth and long-term gain. We're all living longer. We need our capital to go the distance. So we need equities, but we need that diversification of equities. So it's really important that investors look under the hood and understand the types of equities that are suitable for this environment. And so, you know, we have a chart which showcases in a volatile world, the pattern of performance matters. And it certainly does, because it's actually in an environment like this that investors really care about that absolute loss. So what we're seeking to do generally is deliver on that upside capture in rising markets, and then in declining markets and in challenging periods such as we're in now, just that mitigation of risk. So we've taken a look at some research with regards to the last decade, and generally in over that period, January 2013 to December 2022, when we look at returns over those periods, and when the market has declined, we'll say on average 8%, our companies within this cohort of quality, stability and price have delivered a positive return of 1.6%. And then in moderate rising markets, for example, that's delivering, we'll say on average 5% performance, this actual cohort of stocks is actually delivering around 10%. So double the broader market during that period. Of course, past performance is not a guide to future returns. I will acknowledge that. But at the same time, we feel that the characteristics of these companies have delivered that long-term capital growth over the long term and mitigated risk over many periods in that 10 years.
And that also could be interesting even in a scenario right now, like we are right now. For example, the high inflation, lower growth, increased volatility. Even with that characteristics, also equities could be also interesting, right?
Absolutely. I think, as I said before, just generating those real returns over inflation, over and above inflation, is really important right now, and certainly over the long term. As I said, we need our capital to go the distance. And we have done research going back as far as 1970 and looked at, again, looking at US stocks and QSP and how it performs in three very specific environments: high inflation, after Fed rate hikes, and then if the market is decelerating. And generally what we have found is this cohort of stocks, in particular within high inflation environment, has outperformed the US market by 9%. That's after Fed rate hikes, actually it's outperformed by 9%, sorry about that. In high inflationary environments, it's more in the region around 6%, and very similar outperformance when growth is decelerating. So all in all, we feel that this type of those characteristics of stocks are very good with regards to capturing that upside and delivering on that downside and mitigating that risk in periods such as we're in now.
So even if the growth continues to decelerate, even if we have that, QSP is also doing better than the rest of the stocks, so it's pretty interesting. And finally, what do you think about volatility, Teresa? Do you expect more volatility for the equity investors during the next decade, for example?
Yes, we are expecting, our investment team are expecting more volatility in the months ahead. And we feel that, I guess, these characteristics of companies are well positioned with regards to tolerating and mitigating risk in this type of environment. It's really important, though, that investors do diversify and look under the hood of their portfolios with regards to what it's delivering on and what their objectives are. In managing equities over the past 10 years, our investment teams really have, three theses in mind with regards to staying clear of the market, trying to time the market. It's really best not to do that. developing that dynamic defense, because every environment is different. Even in a rising market, every market is different. And then casting that wider net for those companies. So we're not just looking at traditional defensives like healthcare, consumer staples, for example, or utilities. We're also looking wider than that. We're looking at technology, tech enablers, for example. We're also looking at industrials. We're finding many opportunities within industrials right now. We like companies, for example, that are benefiting from the EU Green Deal. We like companies that are benefiting from the Inflation Reduction Act. And so it's that wider net of companies with these characteristics that we feel we're well positioned to enable investors to stay invested over the long term.
So very interesting work, very interesting insights. Thank you very much, Teresa Keane, Product Director at AllianceBernstein. As always, it's a pleasure to have you here.
Thank you very much appreciated. Thank you. Bye-bye.